Every day, the money in your pocket is worth less, and most people still do not realize the risk. Peter Schiff, one of today's most straightforward and critical economists, warns, get your money out of banks before it's too late. He predicts a financial crisis so intense that the 2008 collapse may seem small in comparison. Think about it. Wizard, how long will your money keep up with inflation without losing strength? If inflation continues to spiral out of control and the dollar keeps losing value, your financial planning and security are at stake. In this video, you will discover how to protect yourself from this scenario and why Schiff believes that few are prepared for what's coming. Stay until the end and understand what you can do to protect your wealth while there's still time. Peter Schiff, renowned economist and advocate for finance, points to an economic crisis that threatens to be even more severe than that of 2008. He believes we are on the brink of deep financial turbulence, driven by a combination of runaway inflation and risky Federal Reserve policies. If you think the 2008 crisis was tough, with housing prices plummeting and jobs disappearing, Schiff sees the current scenario as a similar minefield where one wrong choice could cost much more than one imagines. The warning is clear. The inflation we already feel in our pockets can escalate quickly if measures are not taken. Schiff sees money printing and quantitative easing, that is, the increase in the amount of money in circulation, as the villains that silently devalue our purchasing power. And who is at the end of this line? All of us, who depend on income to secure a decent life. A practical example is simply to observe the shopping cart, which seems increasingly empty as the price of products rises. Schiff challenges us to see this inflation as a symptom, not as an isolated problem. Moreover, Schiff's forecast takes into account the behavior of major economies, and that is also a warning sign. He reminds us that central banks, in the past, always resorted to money printing in crises, but the cost of that appears years later. For the attentive investor, the path is not to wait for the market to normalize on its own. Think of the decisions you make today as a way to protect yourself. Investing in financial planning and seeking additional income may be the difference between stability and uncertainty. In light of all this, Schiff advises a posture of attention and preparedness. This is not alarmism, but a call for financial responsibility, something that, according to him, is lacking in many governments and, consequently, in the general population. If you had known in 2007 what would happen the following year, what would you have done differently? We are at a similar point, but now we have the guidance of experts at our disposal. And this is just the surface of the problem. There are other important implications at stake. For Schiff, inflation is not just a number on a chart. It is a real threat that tightens our wallets. He warns that the pace of money printing and quantitative easing policies may soon weaken the dollar irreversibly. Imagine the dollar as the anchor that keeps the economy relatively stable. Now, visualize that anchor corroded, losing its ability to hold. Each new dollar printed, instead of creating wealth, reduces the value of the money we already have saved. This impact is primarily felt in the cost of living. If today a coffee costs $3, tomorrow it could cost $5, with the same value in your pocket losing strength. Schiff believes many still underestimate the power of inflation, thinking it is temporary or controllable. But the reality, according to him, is that a devalued currency destabilizes families and hinders healthy economic growth. For those who want to preserve purchasing power, seeking ways to accumulate wealth outside of cash, opting for safer assets, may be crucial. And this advice is not just for big investors. Anyone can take steps to avoid losing value. Schiff suggests practical alternatives, such as acquiring small amounts of gold, which tends to appreciate when the dollar falls. Another possibility is to start investing in real assets, such as real estate or stocks of resilient companies. These investments can be the key for those seeking a safer extra income, independent of currency fluctuations. The scenario may become even more challenging. If the value of the dollar continues to decline, the cost of essential goods and services will only increase, reducing the overall standard of living. Schiff leaves us with an important reflection. Money that depreciates may seem harmless in the short term, but over time, it transforms financial planning into a necessity, not just an option. This is the time to understand that the issue goes beyond inflation and the dollar. There are other strategic choices to face this growing challenge. In light of this scenario, he is emphatic. Keeping money idle in banks can be a risky decision. He advises people to consider alternatives to protect their assets, investing in solid assets like gold. Think of gold as a shield that keeps your wealth safe when the currency loses strength. Instead of losing purchasing power, you preserve your financial security. For those just starting, Schiff believes that large investments are not necessary to take the first steps. Buying a small amount of gold or even silver coins can be a prudent and strategic start. There are accessible platforms even for those seeking extra income to strengthen their financial planning. After all, even an emergency fund in consistent assets makes a difference in uncertain times. Another important point is to diversify, avoiding concentrating everything in a single financial institution or asset. Schiff warns that in the event of a bank collapse or liquidity crisis, those who have all their savings tied to the traditional banking system run the risk of losing access to those funds. A practical example would be to divide your reserve among assets such as gold, real estate investment funds, and even international investments, ensuring greater protection and flexibility in times of crisis. He leaves a simple lesson: do not let the convenience of having money in the bank make you ignore the signs of the market. Even if everything seems safe now, an extra layer of protection is never too much. The time is right to reflect on the best ways to maintain what you have achieved and to be prepared for what lies ahead. But this is still just one layer of the entire issue of financial security. There are other assets on the radar that deserve special attention. For Schiff, treasury bonds, traditionally seen as safe, may be becoming a disguised trap. With interest rates rising, these bonds, which were once reliable refuges, begin to resemble the dangerous subprime mortgage market of 2008. What seemed harmless at the time turned into an economic nightmare. Schiff points out that this rise in bond yields represents a loss of value for those who acquired them previously, making them a risky choice, especially for those seeking stability. He suggests caution and careful analysis before allocating significant investments in these bonds. Think, what if this asset, at the moment you really need it, is worth much less? For the average investor, this drop in market value of bonds can jeopardize both financial planning and the extra income sought with these assets. According to Schiff, protecting wealth in low-risk assets is essential, but bonds are far from offering the safety they once promised. For many, the idea of diversifying into government bonds has always been almost automatic. However, Schiff warns of a shift in perspective. It is important to assess whether these bonds are really suitable for your strategy, rather than just following them out of tradition. For those seeking a safer alternative, he suggests investing in tangible assets, such as precious metals, or even shares in solid and diversified companies that prove to be more resilient in times of crisis. The central message is to open your eyes to hidden risks. This is not an outright condemnation of bonds, but rather a realistic analysis of the current economic context. If even the assets considered safest are becoming vulnerable, it may be time to reconsider our bets and look for options that maintain value amid turbulence. And when it comes to value, Schiff points to another vital aspect of the American economy that directly affects all consumers. The role of the dollar as the global reserve currency is acknowledged, but he warns that this apparent strength may be slipping. Although the dollar remains the dominant currency, he believes its devaluation is just beginning, and this will weigh even more heavily on American consumers' wallets. Have you imagined your purchasing power melting before your eyes? What used to cost you $1 may cost double tomorrow. And when the dollar weakens, inflation gains even more strength. This reality is already visible in the prices of imported products, which directly depend on the dollar's value. Everyday products, from electronics to food, become more expensive as the currency loses value. Schiff warns that with this devaluation, American consumers will feel the effects of inflation firsthand, impacting not only their expenses but also their financial planning. Those seeking alternatives to preserve purchasing power should consider diversifying their investments, a strategic step for those wanting to protect their wealth. The erosion of the dollar can trigger a domino effect, not only within the US but globally. Countries that currently rely on the American currency also face the impacts of this devaluation, generating uncertainties in traditional investments. For investors, this perspective calls for a change of course, focusing on assets that maintain their value amid this transition. Planning is essential, and gold once again emerges as an option, functioning as a kind of plan B for when traditional money fails. By understanding that the dollar is just one part of the economic puzzle, consider alternatives and long-term strategies to protect your income and even generate extra income. After all, dependence on a single currency can be riskier than it seems. And it is precisely this thinking about alternatives that he applies to the broader context, where we see a growing movement of central banks around the world. The current financial instability is not an exclusive problem of the United States. It is a global issue. Many countries face similar economic challenges and seek strategies to protect their reserves. The increasing demand for gold by central banks, for example, reveals a trend that goes beyond mere precaution. It is a clear response to the uncertainties of fiat currencies and a sign that gold remains a safe anchor in turbulent seas. For the average investor, this scenario indicates that the challenges we see in the United States are replicating in other parts of the world, increasing the relevance of solid assets that are independent of the banking system. When even governments turn to gold to protect their reserves, it is a warning that the search for stability is more intense than ever. This reminds us of the importance of considering gold and other tangible assets as part of personal financial planning. Another point Schiff highlights is how this movement of central banks reflects a certain skepticism regarding the future of traditional currencies. With inflation rising in various parts of the world, countries with fragile economies suffer even more. And if even large economies adopt a cautious stance, the attentive investor should follow this example. For those seeking extra income or a safe reserve, it is possible to explore investments in gold, silver, or even commodities that better withstand economic fluctuations. Therefore, as the global landscape continues to transform, it is important to have a strategic and long-term vision. By observing the movements of central banks, we have a valuable reference regarding the safety of gold as an asset. But it is not just gold that is being discussed. There is another option that attracts many investors, something that has gained attention and also raised questions. Schiff does not hold back in criticizing Bitcoin, highlighting that its growing popularity may be diverting people's attention from the historical value of gold. For him, Bitcoin is a highly speculative and volatile asset that does not offer the same security as gold when it comes to preserving value. Bitcoin is like digital gold without the stability of physical gold, which means it can be a risky choice, especially for those seeking safety in times of economic uncertainty. Bitcoin, as fascinating as it is as a technology, still lacks the millennia-long trust that gold carries. Schiff questions Bitcoin's ability to maintain value over time, as its volatility can jeopardize the financial planning of those who rely on it. Imagine seeing your investment rise and fall drastically within hours. This kind of instability can be disastrous for those hoping to build a secure reserve or generate extra income without surprises. Moreover, Bitcoin is often misunderstood, and its complexity makes it difficult for the average investor to assess its true value. For him, gold remains the most accessible and reliable asset for most people looking to protect their wealth. In the long run, the market may realize that Bitcoin does not fulfill the role of a store of value in the way many expect, especially in crisis scenarios where security is paramount. With this, he suggests a reflection. While Bitcoin may offer quick returns, it does not replace gold's role as an economic shield. For those who want to invest more securely, it is preferable to choose assets that have withstood the test of time. And when it comes to safety and appreciation in times of crisis, gold emerges once again as an irreplaceable option. Gold plays a special role as protection in times of instability. With the devaluation of the dollar, he predicts a significant rise in the value of gold, positioning it as an indispensable choice for those looking to preserve wealth. Schiff sees gold as that asset which, instead of losing value, tends to grow when things get complicated. He says investing in gold is like having a life vest for your money, especially in crisis scenarios. Schiff's forecast is not only about the market value of gold but about the security it offers. Unlike many investments that depend on favorable economic conditions, gold shines precisely when the economy is weakened. He believes that for those wanting to increase their wealth or even have a secure source of extra income, gold is a great alternative. And the best part, it is an accessible investment, possible for anyone, whether through bars, coins, or even investment funds focused on precious metals. The increase in the price of gold is not a question of if, but when. He sees the high demand for this asset, combined with economic uncertainty, as an almost certain formula for its value to grow. Having part of your money invested in something that maintains and even increases its value over time can make all the difference in a crisis, helping to offset the devaluation of money in other sectors. With this, Schiff invites us to reflect on the future and to prepare ourselves in a practical and efficient manner. Gold is not just a relic or a symbol of wealth. It is a real tool for financial planning and asset security. In a scenario where crises and challenges seem increasingly imminent, gold can be the difference between losing and protecting what we have achieved. Now that you are aware of what is at stake, will you remain idle while your money loses value? This is the moment to act and ensure that your wealth is protected. Remember, it is the choices of today that define your future. So, how about starting right now? And to make this path easier, check the pinned comment for a tool that will help you organize your finances. With it, you will visualize your expenses, plan savings, and make every penny work for you. This small investment could be the decisive step toward financial freedom. Wizard, don't miss the chance to transform your future. Subscribe to the channel, turn on notifications, and always stay ahead with the best tips to achieve your financial goals. Shall we go together?